Hello, this is Brian Shannon from Alpha Trends Blogspot. Today is Saturday, May 5th, 2007. We're going to go ahead and take a look at the stocks for trading on Monday. First, I've got shares of CMGI Incorporated, symbol CMGI on the screen. You can see the stock had a really great run from February through late March, and then it's been consolidating just above the 215 or so level here over the last month, I guess. And now it looks like the stock might be ready to get moving higher once again. If we take a look at the short-term time frame, you can see here that it looks like it probably needs to get above 225. So I think that I'd wait for the stock to get above $2.25 before purchasing it. And then once in, I don't think there's any reason to let the stock drop down below $2.17 a share. If you wanted to be even a little bit more risk adverse, you might want to put your stop at, let's say, 221. We'll say officially that buy it above 225 with a stop at $2.20 is what I'll say for now. And then we'll look for an upside target of about $2.60. So up towards this level right here. So if that were to happen, what we would be looking at is just a nickel of risk for about 35 cents of upside in shares of CMGI. The next stock we're going to look at is a company called Ionatron, symbol IOTN. And last November, there were 7 million shares that had been sold short, not yet covered. As of April 15th, that number was 11 million shares. So between November and April, the shorts added 4 million shares. So you can be certain that those 4 million shares are losing money right now. And if we take it back a little further in time, you can see that it's not likely that many of those short sellers are in a profitable position here. The company reported earnings, the stock gapped up on huge volume, pulled back on light volume. Now it looks like it's ready to get going once again. I think it's a good place to buy the stock would be above $6 a share. And we could then set our stop in this one just below this level here, so below Friday's low. So let's say below $5.78 a share. That will give us 22 cents of risk. And I think the stock has the potential to reach up towards $7 a share. And that'd be about this level right here. So that would give us 22 cents of risk for $1 potentially of upside in shares of IOTN. QSFT is the symbol for Quest Software, and you can see here that we've got a nice pattern. The stock looks like it's been consolidating in here right around these moving averages, and now it's reclaimed, jumped back up above that 10-day moving average. So if we look at the 10-minute time frame, you can see that it's got a little bit of resistance in here at the 1696 level or so. So let's say buy the stock above $16.98. We could put our stop down here at $16.78. So that would give us 20 cents of potential risk in the stock. And I think the stock has the potential to make it up to $17.75. So if it was to make it up to $17.75, that would be 77 cents of upside for about 20 cents of risk in shares of Quest. Riverbed, I've been putting this on there the last couple of days with no specific instructions. But this stock, they reported huge earnings over here. Big revenues, big earnings. The stock pulled back to this prior level of resistance. You saw the huge volume rally. It's been really, the openings have been really weak in this stock. And it's been giving you an opportunity for a quick trade if you believe in the fundamentals, which is another story. But now it finally looks like the stock is back above the 5-day moving average. That 5-day moving average is flattened out. We've got a little bit of resistance in here at 3260. So I think getting above 3260 really puts the buyers firmly in control of this stock. And once we're in the stock, though, I think we're going to have to need a little bit wider stop down towards about $32.18. And that will give us 42 cents of risk. What I would suggest, though, is that once the stock can make it up to $33 a share, raise that stop to break even. So we're only looking for 40 cents movement before we raise it to break even. But initially, we're going to have 42 cents of risk. But I think the minimum upside is about $34 a share. That would give us $1.40 in upside. But if you look at the bigger picture, that is this weekly time frame, again, there's a big short position in here. The company just had massive earnings and revenues. This stock could really get going higher. than that $34 level. I'm just trying to give a conservative price target. A couple of stocks to look at on the short side. I'm not going to make any specific recommendations, but MOGN looks like it's starting to break down here in this daily time frame, and probably getting below 22 bucks a share. You might see some downward momentum. I'd probably put a stop right around that area if I was to get involved. And NTES also looks like it's gapped lower here after trying to recover. All these moving averages are heading lower, and I think that really probably below $17.80, the downward momentum would pick up in NTES.